Good day everybody, I am Hao from Group 1 and I'm here to present the strategies and reports of our trades using QST Derivative Trading Simulator. So, before we jump into our trading strategies, let's take a look at the interface that we use to trade our future contracts with. So, there are three monitors shown in this interface. The first one is the quotes monitor, which shows the details of the instruments that are available in the market, whereby on the other hand, the chart shows the price fluctuations of our instruments, which can be selected on the top left. So we could manipulate this chart by selecting intraday, day, week, month or quarterly based on our preference. So if you wanted the price to be updated every single minute, you can select 1 minute. So the price of every single minute will be shown in this graph. Let's take a look at the account information monitor, which is the most important among all of them. In this monitor, we will be able to view our OPM, which is our Operations Performance Management, whereby all the instruments that we have will be shown here. As you can see here, I have two instruments, one is MPCM23 and one is KLIM23. And it also shows the quantity that I have, which is 3 for the crude palm oil future contract MPCM23 and 2 for FTSE Bursa Malaysia KLCI, which is KLIM23. It also allows us to look at our net profit and loss. As shown here, I have lost around $6,300. Here we will be able to view our account information. And most importantly is the current account balance that shows how much money do we have in our account. Here I only have around 6,200, as I've lost around 6,300 here shown in the open trade equity, which shows the money that I've lost during the trading period. The account summary shows your margin and the purchasing power, and of course the open trade equity of your account. Here shows that I have lost around 6,300 as I've said earlier, and this is the total account equity, which means I only have $6,200 left. The purchasing power shown in the top left chart equals to the difference between margin excess and margin. So a negative purchasing power means that you do not have the money to buy even more stocks. So if you wanted to increase your purchasing power to a positive value, you need to let go of some of your units. Let's take a look at the strategies we used on trading future contracts using QST. So to manage risk effectively, we employed several strategies. So the first one is we invest into different types of commodities or stock to diversify the risk faced by us. So for example, as I've shown earlier, I have invested into FCPO, which is this crude palm oil future contract MPCM23, and also FTSE Bursa Malaysia KLCI future contract, which is KLIM23. So by investing into different types of commodities or stock, I could diversify my risk. The second strategy we use is we evaluate our risk tolerance and financial capabilities. During week 1, we bought 11 units of FCPO, which is MPCM23, the crude palm oil future contracts. But on week 3, we realized that the FCPO is not performing well. So realizing the huge loss we faced, we sold 8 out of 11 units that we have for MPCM23 immediately to prevent excessive loss in the event of unfavorable market conditions.
First, we trade in week 1 involved buying 11 contracts of crude palm oil future within the range of 3,789 ringgit per contract. Among the 11 contracts that we bought, only 3 contracts are filled on 15 May. There are no profit or loss since it is our first day of our trade. The remaining 8 contracts are filled at the next day, and their entry price range from 3,771 ringgit to 3,789 ringgit. At the end of week 1, the closing price was 3,729 ringgit, resulting in a loss of 3,173 ringgit 17 cents. We have facing losses for trading on week 1 is due to several factors. We will only explain one from each, which is market condition. Market conditions on day 2 were highly volatile with significant price fluctuation across various assets. This increased volatility posed challenge for accurately predicting price movement. Next, we will discuss about the strength. We have implemented a well-defined trading strategy, providing a structured framework for making informed decisions. This strategy encompasses predefined entry and exit point, risk management guideline, and profit target, effectively minimizing impulsive and emotional decision making. One weakness we have faced was the challenge of accurately predicting market movement. It is important to understand that markets are unpredictable, and even through analysis, there always some level of uncertainty. Factors we did not foresee or a potential misinterpretation of data may have led to inaccurate price direction prediction. The lesson learned involve enhanced risk management by assessing technique and making adjustments to limit potential losses. Evaluate and improve practice to protect trading capital effectively. In week 2, no trade was made during this period. The open price was 3,777 ringgit, the closing price was 3,598 ringgit, resulting in a loss of 11,220 ringgit 935 cents. The overall performance showed a 0% win rate, and the average gain or loss per trade cannot be calculated as there are no trades this week. The analysis of trading in week 2 is almost same as week 1 due to having loss in the trading. In week 3 of our trading journal, we have multiple trades in different future contracts. First, we saw 6 and 2 contracts of crude palm oil future at the price of 3,560 and 3,580 in order to avoid losing. These contracts were bought on 15 May within the price range of 3,771 ringgit until 3,789 ringgit. The closing price of 29 May resulted in a loss of 12,459 ringgit 22 cents. Additionally, we bought 2 contracts of FTSE Bursa Malaysia KHAI future at 1,402 ringgit and sold them at 1,381 ringgit 50 cents on 2nd June, incurring a losses of 449 ringgit 97 cents. Lastly, we have 3 contracts of crude palm oil future bought on 15 May at price 3,560 and closed them at 3,421 on 2nd June, resulting in a losses of 5,855 ringgit 16 cents. Overall, our performance for the week showed a loss of 6,222 ringgit 83 cents, a win rate of 0%, and an average gain or loss per trade of 4,303 ringgit 6 cents. Travel involves selling 6 contracts of crude palm oil future based on technical breakout strategy, but it faced challenges due to market volatility, resulting in larger losses than anticipated. The lesson learned from this trade is to adjust the exit strategy and consider the potential risks associated with market volatility. Trade 2 follow a similar technique breakout strategy, selling 2 contracts of crude palm oil future and also face challenge due to market volatility. The lesson learned from this trade is to continuously evaluate the chosen trading strategy and implement risk management measures. Trade 3 involved buying 2 contracts of FTSE Bursa Malaysia KHAI future based on a technical breakout strategy, but the provided trade detail lacked complete information. The lesson learned is to ensure complete trade information and maintain truth record keeping for effective analysis. Overall, this trade highlighted the importance of adjustment strategies considering market volatility and maintaining accurate trade record for the future decision making.
So, although we lost almost half of our credits during this trading period, but there is something that we are able to gain. We've learned how to utilize our strategy and to prevent excessive loss, to diversify our risk, and we will put this lesson that we learned into good use in the future.